Volcker to Greenspan, 1987. Volcker had broken inflation by jacking the federal funds rate to 20% in 1981. Greenspan inherits a calmer economy, and within 2 months, he faces Black Monday, the biggest one-day stock crash in history. He floods the system with liquidity. The market recovers in months instead of years. The Greenspan put is born, and it shapes investor behavior for 30 years. Greenspan to Bernanke, 2006. 18 months into his term, Lehman Brothers fails. He responds by inventing modern quantitative easing, buying trillions of dollars of treasury bonds and mortgage-backed securities. He saves the financial system. He also seeds the longest, lowest-rate environment in American history.
So Bernanke's transition gave us a decade of free money.
Bernanke to Yellen, 2014. First woman chair. Inherits an economy still healing. She begins the careful process of normalizing rates, slowly, methodically. Then, Yellen to Powell, 2018. Powell's first big challenge, COVID. He cuts rates to zero in 2 weeks, pumps $4 trillion into the system, saves the economy, and then has to spend the next 4 years fighting the worst inflation since the 1970s because of all that money. Now Kevin Warsh walks into a Fed funds rate at 4%, inflation still above target, the longest war in the Middle East since the 70s, and a president who has publicly called the previous chair, quote, a fool and too late.
What could possibly go wrong?